Hi, and welcome to today's podcast where we have invited Derrin Hayden Joseph from LJ Tax, USA. Derrin and his firm specializes in international taxation and cross-border taxation. They have offices in 7 countries, including US, Canada. They have offices in 7 countries, including US, UK, Dubai, Hong Kong, among others. And today I've invited Derrin to discuss on a topic about when is a good time or when is a good idea for an international entrepreneur who is not from USA and he's not based in USA, and when is it a good idea for them to open a US LLC, and what are the use cases and what are the benefits of that, and of course we go into detail of how that works. Welcome, Derrin, to the show. Thank you for giving us the time today.
It is a pleasure to be with you today. Thank you. Thank you for reaching out on LinkedIn and giving me an opportunity to provide my perspective to your viewers.
Sure. Then can you also give us a background of what you do and what your firm specializes in?
Sure, that'll be okay. HTJ.tax, and the website really is HTJ.tax. So we help demystify the sometimes confusing world of cross-border taxation. So we work with private clients who are exposed to multiple jurisdictions. So essentially, if you're just exposed to one single jurisdiction, we're probably on the best team to work with you. But if you are a business owner, investor, nomad, or just an international expat who's exposed to multiple jurisdictions, we can help you structure your situation to be optimal while 100% compliant. And on the back end, we help you with tax returns as well.
Sure, thank you for that introduction. And then I will go straight into the questions now, and starting with really the basics of what is a US LLC.
Yeah, it's a surprisingly elusive concept, especially for people who are based outside of the US, because when you hear the word LLC, people tend to think in terms of their domestic rules, and they think about their local corporations in the jurisdictions that they may presently reside in, because of course we're assuming that this person is outside of the US. Now, in the United States, obviously you have a multiple tiered system of laws. You have the federal system, which is at the national level, and then you have individual states, so roughly 50 different states. The trick to understand is that an LLC is a creature of the state, not of the federal government. So basically, you would need to approach one of the 50 states and form the LLC there. And then afterwards, you tell the federal government how you would like for it to be taxed. Now, it's a relatively new concept. It was started, I believe, in Wyoming in probably the late 1970s, 1977. And when it was formed, there was based on similar structures that were available in Panama. But since then, it's spread out and across the U.S., and it's perhaps the most popular legal structure. Now, the thing is that the nuances that since it is a creature of the state, if you don't tell the federal government how you would like for it to be taxed, they look at it as a transparent entity, so it's tax transparent. What that means is that if it is that you are a single individual member, so it'll be a single member LLC, then it's taxed as a sole proprietor, or it's viewed from the federal government's perspective as a sole proprietor. If it is that there are more than one of you, so it's there are multiple members of the LLC, because the LLC doesn't have shareholders, it has members, then it will be, the default is that it's taxed as a partnership. So that is, I mean, we'll get into more of the nuances as we progress through the conversation. But, you know, I was having a conversation with a client earlier this afternoon, and they're dealing with the European Tax Authority, and it is sometimes difficult to communicate. It says the title or the name of the entity is a limited liability company, but it is transparent for U.S. tax purposes. Also, it's not limited to for-profit uses. So you can use the LLC for just as a holding structure. So it's not necessarily, you're not obligated to use it for commercial purposes. I'll leave it there because I know we get into more questions later on.
Sure. Thank you for a good start. I would like to ask, can you point out some of the misconceptions that foreign entrepreneurs have when they think of starting up an LLC? As you have pointed out, like the concept of limited liability and it actually being a transparent company. What more broader misconceptions that you often encounter on this front?
I think the number one misconception is the idea that it somehow allows you to immediately save on taxes. And I guess, it's a common narrative. Form an LLC, somehow you're going to be living some sort of tax-free life or having a tax-free business experience. And more times than not, an LLC has no impact on your taxes whatsoever. It is, as the name suggests, a limited liability company. It is about legal protection. It's about limiting the exposure of your business enterprise or whatever activity you're into. It's not about saving on taxes. Another misconception is the idea that when it comes to forming an LLC, you just go onto some website, you pay $100, and you form something in Delaware. Because Delaware, of course, is the most popular state for entity formation, especially internationally. The reality is where you form the LLC, which state you choose, and indeed if the LLC is the right solution for you and your team or your business, is really a function of the business model. So the first thing is really to have very clearly in your mind what the business model is, and ideally to have it documented. So when you approach a professional, the professional has complete visibility of what you're trying to achieve and can advise you accordingly. Another misconception, so the third one, I guess, would be the LLCs are about that they optimize your asset protection. Actually, depending on your situation, and especially if you are a non-US person, an LLC may or may not be the ideal solution from an asset protection perspective. So those are the three misconceptions. It's about tax optimization. The panacea, the answer to every question is Delaware, and that it maximizes your asset protection. It really doesn't. Now, there have been many cases that what we call the veil of incorporation has been pierced. And what do I mean by it? So in law, the LLC is a legal person. It has its own rights and responsibilities. It can hire, it can fire, it can sue, it can execute contracts, and so on. So this ties into the whole idea of asset protection. If one is not careful, there are circumstances where the courts would allow that veil of incorporation to be pierced, and whoever is taking legal action against the LLC, and ultimately you as potentially the beneficial owner, they can pass through the LLC and bring action against you personally and have a claim on your assets personally or outside of the LLC. So that, I think that is very, very important for people to understand. It's not just paying a few $100s forming an LLC and it's all good. There are certain responsibilities that come with it. We've seen cases, I think in 2010 in Florida, and even other states like Wyoming, I think quite popularly probably about 7 or 8 years ago, where the courts have allowed the veil to be pierced and the legal action to be brought against the members of the LLC. Anyway, but generally speaking, the important thing is to understand your business model, speak with a professional, make sure the fit is right. Generally speaking, if you do have a choice as to where to form the LLC, and we can get into issues of nexus and permanent establishment later, but if you do have a choice, Delaware is a traditional choice, and they have a body of law that is that treats business owners quite favorably, and I think that's why they've become the jurisdiction of choice for incorporation. There's also Nevada, which is a decent alternative. It also relies on Delaware's long-standing body of favorable corporate law. So those are two popular jurisdictions. If privacy is your main concern, Delaware and Alaska tend to be popular options. if the entity is owned by a single member and something called charging order protection, which we can get into later, if that is a concern, then again, Nevada and Alaska are popular options. If maximum asset protection is what somebody's looking for, then really you're looking at an offshore structure as opposed to just an LLC. Yeah, so I think we leave it at that.
Sure. Thank you for such a detailed response, Derrin. Now, I understand that it can be fairly simple to set up the LLC. You pay a few $100s and that's set up. But banking is a very important element of, especially if it's an operational business that you're trying to set up. Banking is an important element because if you don't have the bank, you can't start trading. And we see similar ideas that it's easier to set up the company in Dubai, but when you go and open the bank, you face a very different set of challenges. So how does, and also in Dubai, like you can't even open a local bank if you're not a UAE resident. You have to become a UAE resident to even pass that phase or stage. But how does the banking looks like for a foreign resident for the LLC company, and what is the possibilities, what are the challenges on that aspect?
I echo your sentiments. I myself got my Emirates ID, I think 2 or 3 years ago. And we went through firsthand just how challenging it is to open a bank account in the Emirates. But it's not just the Emirates. I think it's a global phenomenon, at least in the developed world right now, where banking is just a challenge. And you're absolutely right. It's easier to incorporate anywhere in the world and so hard to get a bank account. So in a way, what we find happening is the entrepreneur, the investor needs to start with, where can I bank first, and where would I like to bank first? And then you look for a jurisdiction to pair with that bank, as opposed to vice versa, starting with the incorporation and then go to banking. Now, in the US, historically, it was relatively easy for non-Americans to go in and open a bank account, but it has become progressively more difficult, as it is in other parts of the world, as I previously mentioned. Now, there are online solutions, I'm not going to call any names, but popular online brands that clients do mention and I'm aware of, but some of them, when you actually read the fine print, even though the name or the title or the marketing suggests that it's a bank, when you take a deeper dive into the fine print, it's not actually a bank, it's a platform. It's a technology platform that sits on top of banking. And so, but I mean, they may serve the purpose of someone who's doing something relatively simple. But if you're doing anything more sophisticated, then chances are you could get blocked pretty quickly. If frequent transactions, size of the transaction, nature of the business, and so on. And even some of those platforms, I understand, they're becoming more and more difficult, even to onboard, far less to keep them. Now, the ideal solution that we tell clients really is to, if you're serious about doing what you're trying to do in the US and you need a bank, a US dollar bank account, and especially if you want to work with some of the more popular payment platforms like Stripe or whatever, it's just to get a regular Main Street bank account. So, Wells Fargo, B of A, Bank of America, Chase. Fly to the US, take all the documentation you'd need, the operating agreement for the company, the incorporation documents for the LLC, your tax ID, your ITIN, the EIN for the tax ID for the company as well, both for yourself and the company. And we get into that perhaps a bit later, as well as be prepared to field lots of questions about your business model. Essentially, it's an interview. But once you go through that process, and proof of address as well. So sometimes people use a fiduciary, like an accountant or lawyer, to open the company. So perhaps that may serve for the banking purposes, or you'd need to rent office space, virtual or physical, depends on your situation. But armed with all of that, there's a decent chance of opening a bank account. Now, failing that, what we've seen clients do is look offshore, look in other jurisdictions. So to some extent, it was possible, like in Hong Kong and Singapore, where I'm based in Singapore, but that has become progressively difficult. There are offshore banks in the Caribbean that I'm aware of, like real banks with banking licenses, but of course they're not top tier banks. So understandably, they come with an element of risk, and the fees are quite high. But the point is, there are options, but they're not going to be easy, and they're not going to be cheap.
Thank you, Derrin. I will move on to my next question. I want to understand, how does foreign tax offices look at a US LLC? So if I'm someone based in UK or France or even Dubai, how does these tax officers look at when someone is operating a US LLC?
Again, it becomes quite controversial. It is not clear cut. Unfortunately, there are what I like to say, promoters in the space, which tend to promote LLCs as a way of either legally avoiding tax or illegally avoiding tax, depending on how you structure it. So they're promoting it for purposes other than that for which they were intended. But be that as it may, you tend to have to spend time educating the agent that you're dealing with. And well, first of all, if it is that you are in whatever jurisdiction, you need to perhaps educate your own local tax advisors as to what an LLC is if they're not familiar with it, because they don't get that it's called an LLC, but it's tax transparent. So that takes some getting used to. And then sometimes there's misunderstanding on the parts of the tax office. The default really is the correct thing, is that unless you have what we call economic substance in the U.S., so you have boots on the ground, you have a permanent establishment, you have a physical presence in the U.S., then the default treatment is that it is transparent and the income derived from it may or may not be taxable in the U.S., but it is also flows through and it's taxable as business income in the jurisdiction in which you reside, not as dividends as some people tend to construe it. Some people tend to construe it as dividends, which may have some tax benefits under certain existing treaties or special tax regimes, but no, it is essentially business income if you don't have, let's say, boots on the ground in the U.S. I think what people don't often appreciate is this concept of a shell company in modern times, where we have something called the principal purpose test, that is the active doctrine among most tax offices. And then the principal purpose test is the idea that if you have a structure, it cannot be an arrangement that has been contrived with the primary purpose of reducing or avoiding taxes completely. There must be some sort of commercial benefit. So it must be operationally functional. There must be a commercial benefit first, and any tax benefit after. So commercial starts first. And this is a principle that exists at the OECD level, at the EU level, and even within the US as well. When you get into the tax reporting side of the US, they do look for by the type of questions that they ask on the forms, particularly Form 5472, the 1120. We'll get into that later. You can see that they're looking to see what transactions are taking place between the entity and related parties, obviously with a view to determining if there's an intent to somehow artificially avoid paying taxes in the relevant jurisdiction. Right now in the UAE, it's not so much of an issue, because so far, if you set up a company in a free trade zone, it still is, and you have no business onshore, you have no business within the Emirates, and it's completely outside of the Emirates, it's still tax-free, free of the 9% tax. But as the Emirates takes the first of many steps, and I think most professionals that are, at least in my ecosystem, we believe that this is the first step towards complete harmonization with international rules. They want to get off the gray list, they want to get off the blacklist, they know what they need to do, but they understand that they need to do it slowly. So, but they've introduced the idea of economic substance in the relevant legislation and the rules. You can see it on the relevant websites. And they are taking steps to prevent avoidance using shell companies. So I'll leave that there.
I want to touch on the topic of asset protection and LLCs. You have mentioned already that there is a concept of LLCs can be used for asset protection, but can you explain how much of it is true, or what are the requirements? How does that work?
You know what? It really, really depends on the situation. One size fits all. One size cannot fit all. If it is that we have the scenario like you painted at the beginning, where someone is outside of the U.S., perhaps based in the Emirates, for example, and they're trying to do business using a US LLC, one would imagine that they've chosen to use a US LLC because the business is somehow connected to the US. And if they have business somehow connected to the US, perhaps their assets in the US, and those perhaps are in need of protection. It's really important to observe the rules. Some people, again, they pay. If you're doing an LLC correctly, it's not going to be a few $100s to form it. It's going to be thousands of dollars to form it. Because, you don't want to just go with the free template for an operating agreement that is provided, because that may or may not work for your specific situation. It needs to be tailored to whatever your circumstances are. In addition to which, you need to follow the protocols. As with any company established in most jurisdictions, right? You need to have AGMs, you need to have minutes, you need to keep the books in an accurate fashion according to international accounting standards. You need to ensure that you're not commingling funds, even if it is just a single member LLC, it's just yourself. You're making sure that you cross all the T's and dot the I's is still quite important, because failure to do so allows someone who's suing you to pierce that veil of incorporation. So what you're looking for is both inside protection and outside protection. So, for example, if you have rental properties in the U.S. owned by an LLC, if a tenant or someone who's visiting, they slip and fall, the U.S. is a very litigious place. So it can be a lawsuit, right? Now, if it is the LLC is not properly structured and well maintained, the person bringing legal action can bypass the LLC and get to you and get to other assets you may have in the U.S. Alternatively, outside protection, you're having a dispute with a supplier or with a customer, maybe you're selling online. And again, an LLC that's not properly structured. There are cases where, it's not normal, but there are cases where the judge would allow a charging order where, first of all, they can get a claim. They can have a claim on any distributions that come from the LLC. It's exactly, typically if you try to pull profit out of it, it could be subject to taxation, or it could be subject to claim by the person who has levied and won the legal action, or worse yet, the entire structure could be taken apart from a legal point of view, and the person bringing that lawsuit from the outside could have a claim on the other assets that you have inside that LLC or another LLC that you hold personally in the U.S. So the assumption that you can just pay a few $100s and enjoy protection without paying attention to the proper protocols and the ways of maintenance is probably misguided. The ultimate protection is, of course, an offshore structure. So what we advise clients, and we have several clients in the Emirates, of course, is you would probably have a free zone company. So you own the free zone company, and then the free zone company in turn owns the LLC in the U.S. So that tends to provide, but that still doesn't relieve you of the responsibilities of proper record keeping, etc. But that tends to maximize the protection structure in that context.
So Derrin, I want to now ask you about two of the important numbers that you hear quite a lot when you're operating a US LLC, and those are ITIN number and EIN number. So can you explain to me what these are, how they differ, what are the use or case of it, and why are they so connected to a US LLC?
It's quite reflective, or is it quite a similar situation as what obtains in any other jurisdiction, like in the Emirates, right? If you're in the Emirates, you need to have your Emirates ID, and that kind of is like your identification number for getting things done, whatever your ID is. And similarly, when you form that company, the company ID, the company reference number is important for getting business done as a corporate entity. So similarly, in the US, the ITIN, or the individual tax identification number, is one of the first numbers that you probably want to get a hold of. This is assuming that you hold interest in the LLC in your own name, which we touched on previously, but I don't normally advise clients to do. But if you've done it and you hold interest in the LLC in your own name, then you would need to get an ITIN, an individual tax identification number. You would get that by making an application. The default is you fill out something called a W-7 on your own and submit, but you need to submit your passport, and you need to send it by courier to the IRS. Most people don't like doing that. So what I advise clients to do is find a certified acceptance agent, and you can just go to the IRS website and have a look. Just filter for wherever it is that you are based, and you get a list of CAs or acceptance agents in your jurisdiction. So you contact one of them, which it's not limited by geography. So if it is that you're in the Emirates, you can contact an acceptance agent in London or anywhere, because these transactions can be done internationally, electronically, and so on. So anyway, so you contact your preferred acceptance agent, you complete the application, the W-7, they'll verify your identity, there's a certificate of accuracy, a copy of your passport. Now, they've cracked down on ITINs in the last few years, progressively perhaps over the last 10 years, because it, as you would imagine, has been subject to a lot of fraud, people obtaining ITINs for their pets and using that to get deductions and all sorts of nonsense. So the default rationale for getting an ITIN is to file a tax return. That is the default. If it is you're applying for an ITIN and it is not pursuant to filing a tax return, it'll be under one of the exceptions, and they tend to be very specific in the rules as to what exceptions would apply. So if it's not listed in those exceptions, chances are it's going to be rejected. They reject, and the rate of rejection is pretty high. So you'd want to liaise with that acceptance agent to make sure your application gets submitted in the proper fashion. So that's how you get your individual tax identification number. The processing time, the IRS says is 6 to 8 weeks. We're seeing a processing time right now of perhaps 8 to 12 weeks. So a little on the higher side. Again, we're getting into peak time right now. It's kind of like tax season internationally, because there's a filing deadline. We're having this conversation in October 2023. There's a filing deadline for mid-October. So things are becoming a bit backed up. But say about 3 months is the turnaround time. Now, the EIN is the entity identification number. So this is for your LLC. If it is that you are a U.S. taxpayer, you can do it online in less than 5 minutes. The application, it's on the IRS website, and it's super easy. It's not a problem. If it is you're international, for example, you're not a U.S. taxpayer, which most people perhaps listening to this would fall into that category, then it's going to be more time consuming. You can try to do it alone, but it's difficult to navigate, as many things U.S. government related. So you probably want to speak to an advisor who is familiar with the application process for doing it internationally. It involves filling out the same forms, but it needs to be faxed in, and they need to get like a power of attorney, and then they mail it to you. Or normally what we do is we call in about 2 weeks. We send it in, we send it in, and then we call in about 2 weeks. And then you have to fax it just to make sure it's you. And then they give it to you on the phone, and they fax it back to us. So we get it in about, let's say, 2 to 3 weeks. But those are the two forms that you would need for tax compliance, as well as for banking purposes as well.
Thank you for the response, Derrin. Okay, so then can you tell us about the concept of taxation, especially direct taxation, when it comes to a US LLC? There is a very simplified concept, like you open a Wyoming LLC and then there is no corporate tax. But what is happening there? Really, on what's the actual thing on the ground? How does the direct taxation works when it comes to US LLC?
Right. So again, as with all things U.S. government related, it's not going to be as simple as it is in the Emirates, for example. So the tax depends on the business model, what it is you're using the LLC for, what it is you're doing in the U.S. But generally speaking, in terms of direct taxes or income taxes, you're looking at two buckets. There's FDAP and ECI. FDAP, that stands for fixed determinable annual and periodic. This is more or less passive income. So people who are investors, so people use LLCs to structure investments into various publicly or privately held or traded entities, securities, or whatever. Then that is, so you're talking about dividends, interest, royalties for YouTubers, lots of YouTubers in the Emirates. The royalties is considered FDAP income as well. So basically, if you want to put it just, I know it's a broad brush and it's a bit crude for anyone who's listening to this and who really knows it inside out. I know I'm being crude, but if it's passive income, it's FDAP. If it's income pursuant to an active trade or business, then you're looking at ECI or effectively connected income. So this is if maybe you're running a shop on Amazon or Walmart or maybe your own Shopify store or whatever. If it is that there may be some warehousing at Amazon, you may have representative staff, maybe you have buyers, maybe you have promoters or whatever on the ground in the U.S. If it is or rental properties, most popularly as well. If there's an active trade or business is ECI. So the difference being that the FDAP income, that the so-called passive income, is subject to normally just a fixed tax rate. So the default is, I know there are exceptions, and it depends on whether there's a tax treaty in play. There's no tax treaty with the UAE, but there are with other countries, many other countries. But the default is 30%. So there's 30% withholding by whoever's paying you that passive income. They're supposed to withhold 30% and give that to the U.S. government. If it is that you're running a business, so therefore it's ECI, then you need to file a tax return. And then you'd fall into whatever tax band there's a progressive tax scale in the U.S. like other jurisdictions. So it could be zero if the income is small, or if you tax on the personal tax tables, it can go up to 37%. If it is, I'll leave it there. If it is that you have a corporate structure, it's probably going to be 21% is the present corporate tax rate, but there's also something called the branch profit tax, which may be beyond the scope of this. But that's essentially what you're looking at. Passive income, 30% withholding, active trade or business, you're gonna probably be better off filing a return and paying whatever the right calculated tax rate is.
What about the indirect taxes or tax on sales? Like we have a VAT in Dubai and similar concept that we picked up from UK. How does the indirect taxes works in the US, and especially in the case of a US LLC?
Again, of course, there's no one size fits all. It really depends on your business model. What is the nature of the business you're running? But the VAT system in the Emirates, it is quite simple and easy to understand, relatively speaking. In the US, it tends to get a bit more complicated. So yes, there are 50 states, but each state is divided into various sales and use tax jurisdictions. So in all, there are over 10,000 sales and use tax jurisdictions in the US, and they have different tax rates, different thresholds for triggering the sales and use tax. Different filing frequencies. Sometimes it's every 2 weeks, every month, every quarter. It gets some of them you can file online. Some of them require paper filing. Some you can register online. Some you need to register manually. So it really is varied. But essentially, it is similar to VAT. I know if there's anyone that's an expert and listening, they're shouting, "No, it isn't." But for the purposes of a simple conversation, it is similar to a GST like in Singapore, or VAT like in the Emirates. It is a tax that you, as a seller, would need to collect from the person you're selling a product to, and you need to remit that to the competent authority. normally someone at an authority at the state level. But it does get more complicated. Previously, the trigger for sales and use tax, this is before 2018, it was driven by physical presence. So nexus is what we call it. So you needed to have a physical nexus. So the easy one that everyone is kind of familiar with is Amazon. So Amazon, if you're an Amazon seller, you can go online and into your portal and you can pull down a report where Amazon tells you, how your product sales are doing. It also shows you, says Amazon, if you're using FBA, fulfillment by Amazon, Amazon takes responsibility for distribution, right? So they can tell you which warehouses your product has passed through. That's the fact that that it was physically in a warehouse, let's say in North Carolina, would trigger a nexus with North Carolina, and therefore sales and use tax would be reportable and payable to North Carolina. That's how it was traditionally. Then in 2018, things went crazy. There was a case called the Wayfair case, if you want to Google it. And after 2018, what it did, more or less all the states shifted from a physical nexus to an economic nexus. So that means that even though there's no physical presence in the state, by virtue of you having consumers, people buying your product, or if you're doing SaaS as a software as a service, that could trigger it as well. So you got people that are buying and consuming what it is you're selling. And once it passes a certain threshold, you have nexus and you need to file, you need to register and file and pay. So the trick is, or the frustration is, that each jurisdiction may have a different nexus. People say the default is, 200 units or $100,000 in sales. That's painting with a broad brush. Some have 100 units instead of 200 units. Some have $50,000 threshold instead of 100,000. So what we recommend clients do is use a sales and use tax team. And you have a consult with them. You go through your sales and understand, okay, where it is you have triggered nexus, and therefore where you need to register and pay.
Connected to what we have just discussed, well, once someone has acquired a US LLC, what are the filing requirements to maintain it?
Okay. Typically, if it is you have FDAP income, so that is, again, you are earning or you're deriving revenue in terms of dividends, interest, royalties, basically some sort of passive income. All you may need to do is file a W-8 form, a W-8 Ben or W-8 Ben-E, depending on your structure and your situation, with whoever the withholding agent is. So, for example, if it is that you've invested on a securities platform, you can fill in the W-8 Ben, you submit that, and that's it. So that doesn't go to the IRS, the withholding agent. They retain that, and they use it as the basis for calculating what the withholding should be, which in the case of someone in the Emirates is going to be 30%. That they withhold on your behalf, and they send that to the tax office. And in that case, you don't even need to file a tax return. If it is that you have ECI income, as we previously described, effectively connected income, you're running a trade or business, an active trade or business, then it becomes a bit tricky. You would at least need to file something called a 5472, a form together with 1040 NR. This is a non-resident tax return, and you need to declare the income that you've earned in your active trade or business, and depending on where it is on the scale, you tax accordingly, and you remit that payment. If it is that you're holding your LLC not in your name personally, it's not a 1040 NR, there's an 1120F. So, again, you'd need to speak with a tax advisor, a tax team that understands international taxes as opposed to just U.S. domestic taxes to figure out what's right for you. Even if there's not much income, or there is no income in the trade or business, we still recommend that what we call a protective return is filed. This is just in case the IRS at some future point in time looks back in years to come, looks back on the situation that has just passed and determines, a tax return should have been filed. you retain certain rights and privileges to certain deductions or whatever if you file a protected return. So essentially, it's a nil return. But that's one of the reasons we say this thing is complicated. Speak to a tax team that understands your situation, that you can get the right advice. But generally speaking, that's what you're looking at in terms of filings.
So Derrin, thank you for your time, and I really appreciate you sharing all the information that you were able to condense. Of course, we did not had enough time. But my last question to you would be, like, if someone wants to approach you or work with you, how can they get in touch with you?
Sure, I appreciate you reaching out and sharing some of your time as well. The best way to contact our team is via our website, htj.tax.
I think that would be good. Thank you, Derrin, for your time, and I wish you had a good day. Yeah.
Thank you very much. See you next time. Bye-bye.
Sure. Bye-bye.